This Saturday on 8th November, double the insights, double the growth. By 11 a.m., we have group health cover versus personal policy. Why you need both. Know why you need both the insurance to keep your family protected. At 12 p.m. IST and 10:30 a.m. GST, we have smarter wealth creation for NRIs. Learn how to make your money work beyond borders. Link in description. Join this webinar to make your weekend an actual learning weekend.
Lowering risk in your portfolio. That's essentially the topic of this video. If I suggest somebody to lower the risk in their portfolio, the immediate response would be, I can take risk. Why do you ask me to lower my risks? I have a very high risk appetite. I respect that. The fact that you have a risk appetite which is higher does not mean that you have to take high risk in a risky market, in a market where the market risks are already elevated. If you have a risk appetite, a strong one at that, how do you use it? You use it constructively when the markets are showing a tendency to move away from risk. So you take risks selectively and carefully at a time when nobody wants to take risks or everybody is running away from taking risks. That's how a person should use a stronger or a higher risk appetite. However, the general trend is people think that they can take high risk at all times because they have a strong risk appetite. This is, in my opinion, a misuse of your risk appetite. If you have a strength, if you have a strong point, if you have a very significant calling card, when do you use it? You just don't throw it around. You use it when it has a very strong currency, when it has got the power. Generally, people don't make the difference between using their strength at all times and using their strength more emphatically when the tide is in their favor. Effectively, today the tide may not be in your favor, so you should conserve your strengths, which means you should reduce the risks in your portfolio. You shouldn't take very high risk at this point in time. At the same time, you should take some low risk decisions which will protect your portfolio. Effectively, you need to manage your risks more holistically and not confuse your high risk appetite as something which you can apply in a secular way in all kinds of markets. It doesn't help. There is no merit in doing that. Most people I know don't compartmentalize their risks, don't segregate their risks, don't apply their risks correctly, and don't see the holistic big picture of their investments from a risk perspective. Most people spend all the time chasing returns and they think risk is the fuel to get returns. So, at all times if you pour fuel into the investment tank by taking more and more risk, you assume that you will make more returns, that your portfolio will move up faster, will travel faster. Reality is, it doesn't work that way. We are at a time when you need to understand this very clearly. You need to have a more measured approach. You need to lower the risks in your portfolio. You should be very, very calculative and correct in your risk taking. You should take risks only if the reward is commensurate. If the risk reward is not balancing or matching, you should wait and take risks only when the risk reward comes into the zone of comfort that you will like. This is a very interesting market. This is a market where there are opportunities, but not all opportunities are worth taking. You need to be extremely selective, and by being selective, you are sure to manage your risk far better than by just jumping at every opportunity. Thank you for watching this video.